Groundfloor Robo-advisor for Investing Honest Review. Watch before using. Groundfloor is a unique robo-advisor specializing in real estate debt investing, allowing users to invest in short-term high-yield real estate loans with as little as $10. Unlike traditional robo-advisors that focus on stocks and ETFs, Groundfloor provides direct access to fractionalized real estate loans, offering a blend of fixed income stability and real estate growth potential. It's designed for investors looking to diversify outside the stock market while maintaining control over their investment choices. The platform assigns risk grades to loans, with expected returns ranging from 6% to 14% annually. There are no management fees, and investors receive monthly interest payments, making it attractive for passive income seekers. However, the key drawback is liquidity. Funds are tied up until the loan is repaid, which can take months. Additionally, while Groundfloor assesses borrower risk, defaults can happen, leading to potential losses. This platform suits investors comfortable with higher risk in exchange for high yields and those seeking alternative investments with a relatively low entry point. Compared to REITs or crowd-funded real estate platforms, Groundfloor gives more transparency and control but lacks immediate liquidity. If you prioritize predictable cash flow and can tolerate some risk, it's a solid option. However, if you need instant access to your money or prefer broader diversification, traditional robo-advisors like Betterment or Wealthfront may be a better fit.